Good morning, good afternoon, good evening, yWhales. We have a great episode for you all today. I'm joined with my co-host board member of yWhales, Jessica Billingsley. We've got a fantastic episode of an example of a Web2 company transitioning their entire business model to Web3, focused on the real estate industry. We're joined by President of FormFree, Eric Lapin, and founder and CEO, Brent Chandler. Eric, Brent, nice to meet you guys.
Good to see you again, Siva. Nice to see you, Jessica.
Yeah, it's great to be here.
Nice
Thank
to see
you
you
for
both.
having us.
Awesome. So Web3, I mean, how does a bunch of Web2 guys transition an entire company, a successful company, especially in the residential real estate industry, into Web3? What hooked you guys?
Wow. Yeah, that's a question both Eric and I could spend hours on. But I think it really comes down to, and by the way, I'm Brent. I'm the founder and CEO of FormFree, and delighted to be here. I mean, our mission is really driven from what propelled us from 2 to 3, and even looking out further in a few years, 5. But without exception, it's about empowerment of the consumer, of the human, empowering consumers with their own information to act on their own behalf and share that information as they see fit, and really open up the world to a different mentality of control. And rather than hoping for the best, they can drive solutions with their own data. And their data is coveted. The data is coveted. The data is very, very personal, and ensuring that security and trust resides with the consumer. Man, that's one reason. Eric?
Yeah, the other thing that comes to mind is, when you're looking at Web 2, and we all understand that Web 2 is where we've been really since 2006. So saw the big increase when we had the social media platforms come into play about 10, 12 years ago. The entire time, I think you're seeing most of this being, how do you utilize data and what actionable insights go on there and what intelligence goes on that data. And that's where we learn about, I would say, in Web 2. The other thing that we're seeing now as well is, Brent and I were having a discussion. This was probably over a year ago. And we're talking about, with everything out there in the world where we're seeing change. I mean, you just feel it out there. There's like, Brent will go into this and talk about it in further detail, but there's a vibrational change. So we read about a lot of these things and what's going on as it relates to financial technology, perceptions, what's important to people. The use and control of someone's data is at the paramount of a lot of people's questions and or fears, and this is done by research. People saying, I want to be able to do business how I want to do business, and I want to be able to trust who I'm doing business with. So it just seems like a natural progression with everything that FormFree's done, and working through the proof points of everything that FormFree is and what Passport token is, and moving into self-sovereign financial identity. It just seemed like the next logical step. So we're excited to be where we are.
I think we definitely want to get into the nitty gritty of, the steps of how you decided to do this and what you're doing. But I'd love to just, before we get there, this is an easy sell to consumers, right? It's an easy sell to your younger folks, to many of us who are familiar with Web3. And I think most of your clients are really B2B and a little bit more entrenched, and maybe this is not common lexicon for them. So I'd love to know how you go about that sale, that strategic partnership, and that those B2B relationships and that education process.
Yeah. As Eric said, the genesis of FormFree was really at a pivotal time in our country. We were going through a financial crisis. It was actually a pivotal time in a global financial crisis, where we saw an industry in 2008, I'm referring back to how an industry was literally turned on its head because of a single root cause, which I could characterize as, and the Federal Crisis Inquiry Commission actually did a postmortem in 2012 characterizing it as the willful disregard of lenders to assess a borrower's ability to repay a loan was the root cause. Now, that gets tranched in derivatives and collateralization, hundreds, if not thousands of layers deep. But at that root level, you know, in the B2B environment where there was an efficacy requirement for lenders to assess the risk in these particular loans, particularly mortgage loans, but this spans the gamut of all loans. The B2B nature is such that if I want a loan, I reach out to a lender and provide a series of documents and information that will assess some level of risk that lender will be able to proceed with potentially giving me a loan. The threshold to meet that are the guidelines set forth by the government agencies. This is, you know, governed by the Federal Housing Finance Authority, Fannie, Freddie, FHA, VA, et cetera. The regulators, in addition to that, set the standards of what is acceptable. Lenders can, of course, skew outside of those guidelines and warehouse these loans on their own merits and risk. But for the most part, the guidelines set forth by the GSEs, Fannie and Freddie, are what dictate or predicate the documentation that a borrower will submit. And this is, again, for the mortgage loan. So in that sense, that's B2B. You know, I go to a lender. That lender then offers me various ways to provide this information. Well, in 2008, it was all paper. And my aha moment really came at that moment where I was one of those borrowers. In 2007, I was entering a purchase agreement for a house, and I really needed the loan. My background was in understanding the quality of data for trading, for hedge funds, for institutional portfolio managements, for large size exchanges that would have massive throughputs of known data. You couldn't make a mistake. So one of the things that I learned was that source data was critical. Truth data, not trusting. And one of the factors in lending was trust. Interesting. So my aha moment came when I effectively, you know, realized that they just didn't know who I was. They were assembling all these documents, but they couldn't really assess who Brent Chandler was or what my propensity or willingness to pay was. You couldn't see it in a bank statement. You couldn't just see it at a glean of a tax return. You could make some judgment calls based on that information and predicated on historical loans and lending. You could make some good assumptions, but you really couldn't understand my risk. But for me as a borrower, I was in desperate need of a loan. I had already purchased the house. I needed a loan. And so all of these factors kind of melded together to realize that I was the common denominator that needed to be understood. And if I could quantify that empirically and mathematically and share that in a digital format instantly, because I already knew what I was worth and I knew where the data resided, I could gain access to it. I could deliver that in a single payload. And they could know, oh, Brent's viable. Let's give him a loan. Well, no, it didn't work like that. It was 60 days later, a loan lock rate blew up and I had to pay more for it, et cetera. But the B2B nature was really how the industry embraced what I was suggesting could be a viable alternative to the way we do it. So in essence, I had to go to the banks and the lenders, et cetera, to more or less accept this new methodology And that took over 5 years to get some level of very limited acceptance. It morphed into guarantees in 2016, but the B2B nature of the business was by necessity. It was just how the business was done. I don't think it was necessarily later years. I knew it wasn't the preferred methodology. I knew the consumers would be more apt to adopt these types of technologies, as we could see the world kind of moving forward with technology at a faster pace than, say, the antiquity of the mortgage underwriting process. So it was a jumping off point about 6 years ago where we realized, yeah, the consumer was really the target audience. And to your point, Jessica, the consumers are truly the interested party. The lenders are the byproduct. The lenders are essentially providing a need that the borrower has. But for the most part, the borrower is interested in providing this information in an easy and sustainable way. So while we do believe that it was necessary to go through the B2B channels to prove the efficacy of the data, the quality of the data, the security of the data, to date, we've worked with over 3,500 lenders. We've processed over 4 trillion in loans that have been underwritten. We've seen those loans age over a period of close to a decade, and we've seen the results. The results are lower deficiency, lower delinquencies, higher quality. So it does make sense that we had to traverse those B2B channels and try to, in essence, move the B2B space to adoption. The fact that it didn't adopt as quickly or as widely as one would have hoped really propelled us to go B2C. And we do believe that now is the apropos time. It's the ripe time. You have several forces, and I'll stop with this, but you have several forces moving in this direction. You have, transformation occurs either by mandate. You can see a government act that forces people to do things, or you can see transformation happen through market efficiency, which is a much more natural process. Market efficiency can be seen with the likes of an Uber or payment solutions. Airbnb is a neat transformation that just took hold and went viral. We have both of those environments happening simultaneously right now. You have a government mandate, which is saying, expand your credit box, reach the not served, empower people with their own data. The CFPB is very loud about giving control back to the consumer. And then you also have the market efficiency.
I agree with you there. I agree with you there, Brent, but just because it's a great idea doesn't make it easy to monetize. So I think our listeners would be very interested in hearing that transition and those monetization steps, what has been successful, what has been not successful.
Yeah, and just so I don't dominate the conversation, Eric is as well versed on this as I am. So Eric, you want to take that one?
Yeah, the true definition of Web3, which is the consumer possessing and controlling the use and sharing of their data, but also receiving the rewards. So just take what we've seen in the past decade or less of gamification and rewards-based economy with various open banking apps that we've seen out there and other solutions. When consumers are utilizing Passport, and at the very core, this is virtual credit. So I, as the consumer, am providing my direct source data. So it's not hearsay, it's direct from my banking account. And the key here is the intelligence that we at FormFree have from an ethical, non-biased approach to determine a consumer's ability to pay, looking at cash flow, looking at a mathematically deterministic approach of, what discretionary income do we have? Is this a consumer that can afford what kind of a loan for an automobile or a small business loan or a home equity or a home loan. And from that standpoint, the consumer is sharing that data and then also revoking the use of that whenever they want. So from a monetization standpoint, we share in that with the consumer. When the consumer is providing their data, they monetize their data and receive a portion of that. In
Oh,
return,
that's interesting, actually. So when Brett, back to your talking track, ownership of data, Web3, I think, a lot of us realize, the transition from Web2 to Web3 is the true ownership of the data, where we are no longer the product, but now we can control the permissions of who accesses our data, right? And especially in the context of SSFI. And again, your example of, let's take the origination of a mortgage, right? On average today, the pain point is, I believe it's a 42-day average when someone originates a loan. Let's talk through maybe a easy example of what all of our listeners know here when they've originated a loan and tried to go and get their house, where FormFree plugs in, and how FormFree is actually controlling and how a consumer may control that data. I think the first part is submission and what we have concepts of VOI or VOA or VOC or VOE. So like verification of credit, verification of employment, verification of assets. Where does FormFree's capability empower the consumer, and what capabilities of your platform allows a consumer to really control that data and how it's being permissed to a lender, to a GSE, and how can they monetize that data to make sure that they're incentivized to continuously verify that data?
Yeah, so it's really a before and after conversation. If we look back over time, it was provided by a lender to the consumer to provide their information. So you're giving your coveted information to this lender and hoping that you get a loan. And it's just part of the underwriting process. So as we go through, the thousands of documents that have to be collected in order to underwrite a loan, you're talking about some very critical documents, understanding your ability to pay, which is essentially what we do. And so that being couched in the lender's underwriting environment is how it was done. The future is where I basically gain access to an app which essentially assesses my ability to pay prior to entering the loan. So effectively empowering that consumer with their own information and then illustrating to them their borrowing power, their ability to pay, their residual income, discretionary income. These are the same underwriting criteria and the same documents that are accepted by those lenders downstream. So imagine you walk into a Passport, you essentially are looking for a loan. It's a loan app. How much do you want? You size it up, you ask, you permission it with your information, and then we analyze that information and intelligibly tell you how much you can actually afford, and then capture that in a token, which we call the qualified borrower token, remove all bias, and then provide that token to the lending industry. The lending industry, which comprises of thousands of lenders, would then have access to this token, this qualified borrower token, which they could effectively bid on and or suggest that they would say, hey, based on these attributes, this borrowing power, this RIKI index, this credit score, this asset income and employment verification, these criteria are loans that I would underwrite. And no longer do we have the bias of the gender, of the race, of the socioeconomic background. So it's really true fundamentals of underwriting a loan. Can they afford the loan? Yes. So that token then becomes the instrument of monetization. The monetization is essentially lenders are hungry right now to be able to underwrite loans. Well, you have this whole plethora of the not served, underserved, no FICO, low FICO, all these conditions that prevent people from actually entering a loan. that are sitting on the sidelines that just haven't entered the space. You open up that environment to literally over 45 million people, 100 million renters who can now potentially look at their own information, make decisions based on their borrowing power, knowing that they can actually afford this loan with their criteria. Those lenders are now seeing a salient, risk metric in a QB, and that constitutes an exchange of monetization. What the borrower gets for that exchange is essentially, instead of just taking a lender that just comes out of nowhere and begin working with them and hoping they get the best offer, you have a market environment where lenders will outbid one another and provide the best offer back to the borrower. So there's a monetization.
Oh, that's interesting. So, I mean, I think what you're positioning and what your platform, at least if I'm understanding it correctly, and let me reframe this in terms of like a layman's understanding. So are you saying that, within the FormFree platform, I now have an ability, on my phone to log into an app, and I only have to validate this once because, or maybe revalidate as it changes. But now I have one central location that I can upload my credit information, my salary information, my asset information, all of that basically goes into, qualifying me as a borrower for a loan. And then right now, from a retail perspective, it's a complete crapshoot. It's basically a game of chance. Am I approved for this loan? What qualifiers are approved of this loan? There's a whole FICO score that I have no understanding of with that algorithm. That's a component of my qualification. And then let's say, I submit that information. Are you saying now you take that information and package that as a token, as a data payload, that token now grants access to a lender to then underwrite a risk profile against?
That's correct. And when we were talking earlier, Siva, and in past conversations, and I'm going to tie this into real estate and some other areas as well, but this is tokenization is the representation of value. So the representation of value is the PII, or the personal identifiable information, and the consumer is providing us through the data directly from the source. And I think that's the key here, because when you're looking at least from a mortgage lending standpoint, and you can also do this with small business and auto, which we also work in as well, you look at the cost of manufacturing a mortgage loan, for example, has gone steadily up in the past decade. And in the last year and a half, it's gone from a little over $10,000 to manufacture the loan to now a little over $12,000. With a passport token and the consumer sharing that token, they, as a lender, now receive an underwritable qualified borrower. So we're flipping the script on the whole model here as far as the lender.
That's crazy. I mean, what you're saying. So again, another pain point, from a traditional consumer perspective right now, when I apply for a mortgage product, when I apply for a bank, personal loan, when I apply for an auto loan, I have to continuously re-upload this information over and over and over and over again. Are you claiming with the passport token that I only have to upload this once, and now when I apply to any lender for any loan product, I don't have to resubmit this. I just have to validate it, and they validate against my token. I don't have to go and apply to 10 different websites for 10 different loans. They just have to connect to this token.
Right. The applying now goes on the other side of it. The lenders are applying to work with you as the consumer. So my consumer experience is now enhanced. It's augmented. And I have this information that I'm sharing. The lender knows my information. I'm allowing them to review it. And let's see what kind of offer you can do based on my profile. So, that's the part that we were talking about earlier, that it's this is also deployable against held away data or custodial accounts as well. I mean, so any financial institution, any lender, credit union, large bank, small bank, fintech lender, neobank, any sort of banking institution that wants to have the custody data of their customers reviewed, we help uncover or look at another lens of what's the ability to pay based on my servicing portfolio of my customers today that normally I couldn't, because we've been in a system of decades of having a score put on us of what's our, what can we afford, what can we not afford based on a 3-digit score with an algorithm in a black box. So what we're saying is, and what we're saying, there's been some great success with that, but as with anything, it's time to look at differences. It's time to look at things that are advanced with better data, better intelligence on top of that data, and then the transformation of controlling of that technology where the consumer controls that. And in this case, it's the passport token. And it's proven. And the thing about in the mortgage industry, as you guys know, very, very large sector of the GDP in the United States. And the height, we saw it over 4 trillion. We're seeing it a little over 2 trillion now, a little over 5 million loans that we saw last year. And there's a lot of business. There's a lot of people that can afford homes that initially did not have the opportunity because of the traditional credit system that we have today. So I'll let Brent talk a little bit further on this about where asset meets credit and talk about the combining of those two. But most importantly, as we go into Web3, 89% of all consumers want to own their financial data and have control of it. And that is a staggering, powerful number. Obviously, a lot of those are in certain generations, and we see that. But you see a lot of generations that want to utilize wallets and utilize the aggregation of all their financial accounts into one view. And they want to be able to share that and have decisions made. And they want to do as much as they can through one app.
Before we jump to Brent, I just want to ask a very basic question. Why blockchain? Why Web3? I mean, why couldn't I do this in Web2 where I have users or consumers fill out a financial profile on a singular platform and they have all that data on a singular platform, and then I just open up an API and the GSEs and the lenders plug into that API? Well, why go on chain? Usually that seems like another layer of complexity.
Not another layer of complexity. It's just an additional opportunity to have that data transfer. The difference, though, and where we see it is with the Web3 play, the transparency, the digital ledger technology that allows for the transfer and assignability of data and the efficacy and accuracy of that data can really only be done with the blockchain. And to go a little further on that, you're seeing success with lenders that at the top of all this, behind everything that we do, there are capital markets, there are secondary markets that provide the liquidity for all of these types of loans. But when you look at the other side of it, all this liquidity is funneling into the center of all this, and the center of all this is you and I as the human or the consumer that's involved in these deals. So if we're looking at the transfer of these datas, or the data as looking at the Web 2 approach versus Web 3, you could do either one. But when you're carving off dollars or basis points off the cost of due diligence and transfers of these assets, at the end of the day, you really want to see as a business, we all take pride in the fact that we're involved in an ESG business. We all want to help the environment. We want to be social. We want to play within the governments and the regulations. But you want to make sure that the business has a scalability and a business model around it so you can continue to move these ESGs components forward. So when you're looking at blockchain compared to where the traditional was, the security, the privacy, the accuracy is of the utmost importance and better in Web3.
You've mentioned RIKI index a couple of times. Our listeners might not be familiar with what that is.
Sure. RIKI is something that we pioneered almost 11 years ago. When Dodd-Frank introduced its law, there were a lot of things in it. One of the calls to action was essentially residual income in lieu of DTI and gross as an alternative for underwriting standards. And for those in the mortgage industry, we know that the veteran loans, the VA loans, actually go through residual income calculations. However, it takes a lot of effort. It's a lot of manual processing, and it could take a long time. And what we decided to do and what we jumped on was the idea that we could automate that. Well, 11 years later, it has come to fruition that our intelligence, we apply some natural language processing and some artificial intelligence in the underlying data of that consumer and can calculate a residual income index. We call it a knowledge
So
index.
is that a competitor to FICO? Because isn't that essentially what FICO is doing?
I would say that this is where we really see the attributes, and in component mathematics, we look at vectors that assess a person. The more vectors you have, the broader understanding of that risk you can assess. And so we see FICO as one vector. We see other attributes like residual income, discretionary income, assets, various transaction activity that really compile together to make a more holistic view of risk to a consumer. So we now know Brent Chandler on a much deeper level. FICO is just essentially one vector. So while we don't dismiss FICO, this is not us against them. This is really about the coming together of additional vectors that can truly assess a holistic view of risk. Now, in the event that FICO doesn't exist, we still have 5 other metrics or vectors, if you will, to assess that component analytics, where that borrower can actually still qualify for a loan, minus a FICO. Where FICO does exist, maybe a 720 is behaving like an 800, or maybe a 620 is behaving like a 720. So that's what the residual income knowledge index really gets into, is assessing a higher value of what this borrower's risk is, what their ability to pay is based on that residual income. It also peers into discretionary income, where we can begin to see, well, they spend a lot of time on these and sundry items, where if we could counsel them to maybe stop spending as much time at Starbucks or what have you, then that could sway your residual income higher to where you could afford a loan in a different capacity. So all of these things come into play instantaneously. The industry wasn't ready for it 11 years ago, but we stayed steadfast on that model. And literally last year, Gil launched the world's first residual income knowledge index for underwriting loans with low FICO or no FICO. And that was the initial entree of RIKI into the world.
Oh, that's big. I mean, there's a substantial portion underserved of the population that just don't have a FICO score, or their FICO score is just too low, right? If it's too low, I can't even do something as simple as validation of my income or validation of credit, because my risk profile to a lender is just too large to have a loan underwritten. So are you saying that your proprietary RIKI score, fills a gap in the market of an underserved population to have a risk profile that a lender can underwrite against?
Huge.
Fills gap and provides opportunity. I mean, it's and the question you ask is a question we get from a lot of people. It's not a competitor. It's different. It's opening up opportunity for that 45 million number that Brent mentioned earlier that never had an opportunity. They were invisible to underwriters. So, and then what you see today, you see what's called the lead generation business, where it's people putting in their information that's not validated up front, but then it's sold to another entity without you knowing, right? If you go on one of these data aggregators when you're looking for a loan, you're going to get pinged with 30 texts and 150 calls, and you just get bombarded. We're not in that business. We're in the business of qualified borrowers. The consumer saying, "I'm out here, I'm qualified. What's your auto program look like for me? What does your housing program look like for me? Let's see what we look like." And that's the exchange or marketplace that we have with our lenders over the years that we've built relationships with on that traditional model, and moving that more into a modernization of the consumer controlling who they want to work with and how. And another thing I'd like to add is when you're looking at this tokenization piece, we focus on one piece, just the consumer, just the human. I think a lot of this gets mixed up in the media, and it gets mixed up in news, and even gets mixed up in some conference sessions I've been at when you have groups talking about 10, 20, 30 different things. Most of the audience gets confused. We're the consumer financial identity, self-sovereign financial identity. And I want Brent to talk about that. He's got a great story of I am, and this will make a lot of sense for you when you hear it. But the days of lenders making decisions on what they can offer based off of data that's 45 to 50% incorrect from long forms that are filled out by a consumer, we eliminate that. So put another hat on, put your lending hat on. If you were a lender and you saw coming in that it came from my PNC bank account, my South Carolina Federal Credit Union, you saw all that information, and then there were analytics on top and some intelligence that said, my discretionary is this, my RIKI index is a 120 or it's a 130, and 100 is par. Anything sufficient or below that is deficient in cash flow. Anything above is a surplus. But if you're making that underwriting decision, especially on today's age, you have to have the best consumer experience out there, because if you don't, someone else is going to come out and make it even better for that consumer. And we're helping lenders by having that, and that cycle time of the 42 days and that manufacturing cost of $12,000. That 42 days is also underneath. If you dig into that, it's called touches, and the touches of a file can be 25 to 26, 27 times an underwriter, processor, closer, shipper touches that file. A lot of those touches, and I was an underwriter, so I know how it goes. It can be a frustrating event. If I knew that I had the direct source from Brent's account, and I knew that was his bank account from his bank in Athens, and I don't need to ask for that missing 10th month statement or that missing rent check, or all those items are gleaned from that asset statement from RIKI. So when you're looking at artificial intelligence, this isn't machine learning. This is linguistics, natural language processing, determining what is going on with that consumer through the account statements, really knowing who I am as a consumer, as opposed to me taking out debt to get more debt, which is what we've historically done.
Great. So I think I'm getting a little bit better picture here that there's a much better sale to the consumer, that, hey, there is a much better way to share your data with a lender. The consumer is incented to do this because they're likely to get a better rate potentially by sharing more of their data in this bigger, better picture. And Eric, you used a couple industry terms here, but can you kind of break that down, and then how you think about sharing that information with the lender and what that revenue model looks like?
Yeah, so when we say QB, it stands for qualified borrower. And a qualified borrower is, take the traditional lead or the model of a lender working with a lead generation company and buying that lead. There's a lot of questions that come around that as a lender when you buy that. So we're cutting to it and saying, as the consumer is providing verified, validated data, which we all know, in order to put intelligence and analytics on there, your results are only as good as your data. We're providing data that is real, direct from the source. The source is the banking asset statements. The traditional model is having people fill out information, and a lot of that's incorrect. So QB, as a qualified borrower, is a generated token or a lead for a lender to purchase and buy, so they have an underwritable file that almost 3/4 of what they need to underwrite is already done in that QB lead.
Interesting. So now as a lender, I don't have to basically rely on a consumer or a home buyer to upload their information into my loan application platform or website. And then I have to go and have originators and underwriters go validate that information. I basically have to make a request to your token to validate that as part of the loan application process. And that, in theory, that cuts down, half of the human touch points during an application process, right? Of that 42-day average, 50% of that is just validating data. So you're resolving that big inefficiency. Am I understanding that correctly?
That's correct. So the adage time is money is no more evident than the passport token, because if I'm on the lender's side, how many processors and underwriters and closers, which are people, are touching those files? Those are what's called touches. Those touches cost money. That is being reduced, which goes in the overall cost to manufacture or originate and close a loan. FormFree reduces that greatly while providing the consumer experience of controlling and sharing their data. So this is an underwritable, qualified borrower. The lender still has to approve it. They still have to underwrite and approve it, but this becomes underwritable for them. And there's nothing like it in the industry today to have something like this as a qualified borrower before the process starts, goes through the entire process with validated, verified data and analytics on top to have the underwriter make an informed decision.
Wow. So FormFree's true value prop from a B2B perspective and a B2C perspective, from a B2B perspective is the ability to originate a loan quicker than it is today, right? Because you remove a significant human capital choke point in validation
Correct.
of data. And then from a B2C perspective, it is a centralized location to have all of my financial data stored once and uploaded once, right? Am I understanding
That's
that?
correct. Yeah, as long as they stay opted into Passport is in control of me as a consumer. It's the vehicle to get any loan that you want from any creditor.
So from an SSFI perspective, self-sovereign financial identity perspective, it is the true initial substantiation of the start of my digital financial footprint.
Exactly. You know, the the self-sovereign financial identity is something we created, building on self-sovereign identity. If we think about self-sovereign identity and the delta between financial identity, the financial data tells a rich story about who you are. By granularly looking at your transaction detail, we can determine, based on the data that we're collecting, corroborating it with other sources, that you are Brent Chandler or you are the person you are saying you are. Memorializing that in your own identity is essentially how we constitute a self-sovereign financial identity. It really encapsulates your financial DNA that you own. This is, again, coming back to the Web3. It really constitutes the known information about you that is yours, that owns your identity, and that is verifiable. Okay. What goes into the SSFI? Your financial DNA. What is financial DNA? It's not a medical term. This is a term that is, again, looking at your asset information, your income information, your employment information, your credit information, public records to the degree that they exist. And this opens up this new form of identity that everyone in the world can accept. And it doesn't depend necessarily on a government document. It doesn't depend on traditional methods of verification. While it can be enhanced with that information, again, in an open network, we would suggest that this is one form of identity that you could leverage for all things in the realm of identity verification. As it relates to payment solutions and DeFi, et cetera, the self-sovereign financial identity really becomes a know your everything about that person, verifiable. Now, we call it the IM token, and this is very unique to a soul-bound zero proof token of identity. We call it the IM simply because the first words humans uttered when they realized they had consciousness were I am. It stands very tall on the shoulders of history in terms of representing who you are. Your self-sovereign financial identity is yours. And upon sharing that qualified borrower token with a lender, creating a smart contract, you would then share your PII information. And herein lies self-sovereign financial identity. So it completes the loop. So while your attributes go out in a QB that are non-descriptive towards your PII, your personally identifiable information, which removes bias. Bias is a huge thing. I mean, people really need to understand how much bias still exists in lending. you know, removing that bias opens up that opportunity that you just spoke to, Siva, with respect to the underserved, the not served, the thin file, invisible people. And this is 100 million people in the United States. It's 300 million in China. And this cascades around the world. So by removing that dependency, creating visibility for those that are invisible, you now open up a caveat to the world of virtual credit. And again, a mortgage is one form of borrowing. It's not the only one, but when we look at this country and we look at a wealth gap that exists today that is greater than it was in 1968, and that date is meaningful. Discrimination was legal up until that time. We have a larger wealth gap today between Black households and white households. That is an atrocity, and that is what we aim to solve. Close that gap. Serve the not served. Remove the bias.
I love that. And I mean, you guys are achieving a capability that a lot of Web3, evangelists and Marxists are claiming the power of blockchain can solve, right? The singular substantiation of a digital footprint, digital ID. So in theory, your passport token, RIKI score, all these capabilities of the FormFree product could be plugged into almost any sort of institutional platform, exchanges, bank accounts, what have you. And eventually you could be the concatenator or the single orchestrator of financial information to then go and validate that via one singular token.
You got it, man. You nailed it. And from an asset standpoint too, if we're talking CeFi and DeFi, in short order, a passport will have a view into a consumer's digital currency wallet, the crypto wallet, any exchange that they have, not through a calculation of discretionary income because it's not used in everyday spending and transactions, but for an underwriter to make a more informed decision to say, there's a couple 100,000 in Bitcoin or whatever it is sitting in there. This is a person that's invested in that space, but they also have a cash flow of $10,000 a month. Here's what we can offer for an auto loan. So it's inclusion of people, and it's inclusion of currencies, and it's an inclusion of availability for more people and more businesses to come together where traditionally there's been some sort of a garden or that wall that keeps people apart from doing business with one another. We're removing that. We're removing bias and removing walls.
If I'm a user, how can I start playing around with the FormFree app? Can I go sign up on something? If I'm a lender or if I'm a financial institution and I really like the capabilities you're bringing, how do I test this? How do I start a conversation with you guys?
Yeah, a couple different ways. And just to finish the thought that Eric just laid out, DeFi goes the other way as well. There's a lot of DeFi lenders right now that would love to offer up loans to crypto holders, currency holders, who would also love to see that you have the residual income carry forward on the fiat side. So again, it kind of we're bridging that gap, and we know there's a huge opportunity there. To answer your question, the app is in the App Store, both Droid and Apple, and it is being enhanced as we speak. But there's essentially a kind of a wait list, if you will, where you can sign up today. We do see a full commercial application in the next few weeks, to which those QBs can be generated. And essentially think of it as a Pez dispenser. If you need a loan, how much do you need? What type of loan? That constitutes a QB. And then you can share it with a plethora of lenders. The lender community, believe it or not, already uses it. That's the beauty of the last 15 years. I mean, the decade of serving up the account checks, we built the rails that this token lives on. They already use it. So when they receive, I think that's a really key point to take home for the listeners. This is already in use today. It's just being used in a different environment. It's just being used, in the underbelly of the beast, if you will, in the underwriting chasm of antiquity. So you're literally providing access to the same information. And so the beauty is the lenders are very familiar with our story. And when they receive this QB, it already marries up right into the underwriting platform. And so lenders have already subscribed at a massive level to purchase said QBs. And so the race is really to identify those borrowers and reach those borrowers who are ready to borrow. And we don't think that interest rates are really the reason that a lot of borrowers aren't coming into the market. Imagine if you're a first-time home buyer, you haven't been exposed to a 3% interest rate. It's not necessarily the thing that's preventing you from getting into it. What's preventing you is that 64% of Black Americans have a 620 or lower, and a 620 oftentimes doesn't make it through the front door.
Doesn't equate to a loan. Can't build wealth.
So
amazing.
So think about it.
Awesome.
Security, transparency, consumer control, consumer engagement's better. More consumers have the opportunity to build wealth. The underwriter likes it because they're reducing costs, they're reducing fraud. We're bridging CFI with DeFi. Exactly. Understanding risk off of direct source data. So you have much more accurate risk assessment than you've ever seen. We've done it for years. DeFi has been doing what they've been doing. Traditional or TradFi or CFI has been doing what they're doing. We bridge it together because who walks over the bridge? The consumer. There's no consumer. There's no B2B business. The consumer's in the middle of all of that.
And the consumer should look for your app in the App Store, right?
That's right.
Right.
Okay.
We've got some incredible enhancements coming out, but
awesome.
And
awesome.
And for other, business leaders, your website,
formfree.com.
Okay.
And we'll drop a link to that in the description of this podcast. And guys, this was an awesome session. And anytime I can flex my data muscles, I always love these discussions and try to distill that information to a layman's understanding is really great. And hopefully our listeners got some transparency on how data is a huge hurdle within the mortgage industry, one of the primary hurdles. So this has been a fun, awesome, episode to record. And a great example of, a testament to your success as a Web2 company, over $4 trillion already processed. And now how you've successfully evolved into a Web3 company and leveraging, Brett, I think you made a reference to ZK, so zero knowledge proofs. It might be an implemented technology within your token. And, you've taken a token, a data payload. Just awesome, fun session, guys. Thank you. I want to thank you guys for being on here. And thank you to my co-host, Jessica. And thank you to our listeners. Whatever time you're listening to this, we want to thank you for listening and have a great day. Have a great night. Thank you, guys.
Thank you both.